Hope I'm audible for you all. If yes, please comment yes in the chat box. Am I audible? Can you please comment yes in the chat box? Because I'm not connected to the speaker. Okay, fine. Great. Okay, so what we are going to do is we are going to learn a past exam question paper, which is of AA September, December 2024-25 syllabus, which is of ACCA's practice platform. It is that time of the semester that you guys have to close your books for some time and do more of revision kit questions. Sorry, do more of question practice. Because only through question practice, you will be able to learn the applicability of your concepts in the exam. Now, these questions are very important and very vital as well. And it is a very recent question. So you will get an idea of how the questions will be asked in the examination. I hope if you want students who have joined online, you can open your practice platform if you want. Otherwise, I will also be sharing my screen. I'm anyway sharing my screen. We'll be reading the scenario and going for questions one by one. I will not be taking any direct questions because direct questions for 5 marks, 6 marks, which are all direct theoretical questions, which I believe that you can attempt it directly and by learning from the textbook or learning from the notes. Okay. But what I'll be doing is I'll be attempting questions from the test of control, direct control, or risk related questions, etc. Okay. So you all guys have opened, sitting in front of me, you guys have opened the practice platform. Azad. December 2025. Just for students who are in the online session, kindly note that this is a hybrid batch, so there are offline students as well. And I'll be speaking to them in Malayalam if they are asking any specific questions. So please don't mind. But I'll be repeating the question, your doubts as well. If you're asking a question, I'll be repeating those as well in English, and I'll be repeating to the students in Malayalam if they didn't understand it. So during that time, I will mute myself so that you will not understand if you don't understand Malayalam. So that I will ensure that I'll mute myself. Okay. All right, so let's look at the questions. As you know, for section B are divided into three, and three questions will be from controls, risk, substantives. Simple. Controls, it could be direct controls and test of controls, control recommendation and deficiency and recommendation. Risk could be risk and risk response. And there could be questions from corporate governance, part A of the syllabus. And finally, the substantive procedures. What are the substantive procedures? And one or two questions based on audit report and audit opinion. So this is how the framework of the section B are created. So this particular question is, as you know, as you can see, it is all controlled system. How did I identify that? You look at here. In the requirement, it is given that 5 components of an entity's internal control system. So you know that 5 components of entity's internal control system are the control environment, risk assessment process to monitor, information system and communication, and control activities. They have already mentioned the components. You just have to give an idea or explain what are these components talks about. So as you know, the control environment means the entire environment within which the entity works. Risk assessment process. What is the process entity has identified to assess the risk of the particular organization? What are the ways in which the entity is monitoring its system control? So you need to explain that how entity they should focus on this, they should focus on that, they should focus on internal control systems, they should focus on monitoring part, etc. Okay. Right now, let's look at the scenario and read the scenario. And what we'll be looking at is the next question, which is to identify 3 direct controls. Okay. And describe a test of control. This is for sales system. As you know, sales system will be integrated, which means it could be computerized as well. Understood? So you have to be able to identify 3 controls It could be system-based controls. And what are the test of control for that? So test of control means what are the evidences we should collect? So EIOU, inquiry, inspection, observation, recalculation, or reperformance. What evidence can we collect and how we need to identify or test them? That's what the test of control talks about. Fine. So look at this. It is 1st July 2005. You are an audit supervisor with Flinda and Co. And you are working on an audit of Grandstand Company, which sells electronic kitchen appliances from 40 stores across the country. You are reviewing the documentation of provided by the finance director, Grandstand, including the extracts of the company's system of internal control. Although the website payroll systems are standalone, the sales and modules are fully integrated into the computerized system. Let's look at the sales system. Grandstand has both business and retail customers. Business customers can apply for a credit account through Grandstand Company's Central Credit Control Department. After performing the necessary checks, the Credit Control Department sets a credit limit, which is authorized and reviewed regularly by the finance director. Is there a control? Yes. Perfect. Perfect. That's a control. So what he does, the credit controller checks the credit for any new customer, and a limit is established and it is approved and reviewed by the finance director. So it is regularly reviewed as well. So if there is a customer who is falling short of the credit limit, he will be thrown out. If the customer is doing well, his credit limit will be increased. Thereby, our loss of sales is also protected. Sorry, loss of receivables is also protected, and goodwill also increased. As well as purchasing in store, business customers can purchase goods via the company's website and collect them from the nearest store or have them delivered. As part of the processing, invoicing process, a member of the finance team matches the detail on the online order to the sales invoice raised to these documents. So what happens? What will happen here? So a member of the finance team matches the online order goods dispatch note with the sales invoices. So it will ensure that customers are invoiced for all goods which have been dispatched. So revenue will be complete and it will be accurate, because once performance obligation is satisfied, goods will be invoiced. Is that clear? Confusions? So second control. Each store changes the same, charges the same price for the goods. But customers who are mailing list receive weekly emails with the discount offers. To claim the discount, customers must show these emails at the cash tills and have the discount barcode scanned. The system then detects the discount from the price charged. Again, there is a control. So if let's say, for example, what does this prevent or detect? Just say, for example, Asjad received a discount code. Okay. If Asjad shared it with Bhavana, Bhavana goes to the store and try to claim this discount. It will not work. Only people who are having that discount code, only customer who are having the discount code, they will be able to show it. And it will be matched against the proper name and number. Second thing is that if Anak goes and asks for a discount code, if he has received the discount code via email, he will be able to claim. Otherwise, he will not be able to claim. So it will be ensure that the discount are only given to the authorized customers. And since you are scanning it, and once you have scanned the discount code, and once it is applied, can you go and reapply? Once Asjad has received the discount code, he has used it. Can Bhavana use it? No, because it has been already used. So the discount code will only be used once. Understood? So three direct controls are completed. There is one more. I'm not going to explain. I'm not going to write that, but just going to explain it. Grandstand monthly management account analyzes revenue by store, product, and type of customer. Percentage of movements in each categories are reported with comparisons to the previous month and the previous year. On a monthly basis, the sales director reviews this information, investigates for any unexpected movements, and completes report which is presented in the next board meeting. So a monthly revenue is reviewed by the sales director, and any unexpected movements are investigated, correct? And the report is presented for an analysis in the next board meeting. So what does this help? It will help for investigating on a timely basis any unusual movements in revenue. So misstatements in fraud or error will be identified promptly. Understood? Right? Very good question. And I think almost all the four, I mean, not this one, this is something new, but these three we have already discussed during the classes because it is a repetition, isn't it? Similar questions have been done previously. So let's try to write the answer. Okay. So I am going to write, the credit check, and I'm going to write about the customer's promotional email, and I'm going to write about the monthly analysis. And the other one, which is GDN matching, you already know. So you can try to write it yourself. And what will be the test of control for the GDN? For a sample of goods dispatch note. Correct? For a sample of orders. Compare, reperform the GDN to the invoices and see if it matches. If it matches, control is working fine. If it does not match, control is not working fine. Correct, right? So let us say you three guys are the three dispatch notes that have been generated, and I am the finance director. If I have performed this work, right? If an auditor comes, your dispatch note and invoice should match, no? If it doesn't match for ANAC, then there is a deficiency. You understood? So when you're testing the control, all you need to understand is whether the control is lying down any or control is leaving any evidences. Control is leaving two evidence, GDN and invoice. They are matched. You also do in the same direction. It is called as re-performance. For sample of GDN, compare against the invoice and see if it is matching or not. Understood? So let us now write down the answers. Okay. Number one, a credit check is performed. Okay. I can copy paste it from here also, but it's a lengthy one. That's why I'm not doing that. Okay. By the credit control department on all new customers applying for a credit account, after which a credit limit is set by the finance director and reviewed regularly. The credit check ensures that credit is granted only to customers who are likely to pay, so that receivables are recoverable. Regular reviews ensures of credit limits, ensures that the limits are not too high, which could lead to irrecoverable debts and overstatement of trade receivables. Limits further it ensures limits are not too low. Okay, this is not necessary to write, but I'm just writing it. Too low, so that customer goodwill will not be impacted. So if there is a customer who is having very high credit worthy, then definitely they will be able to do that, right? Okay. Now, what is the test of control we have to do? Inspect the documentation of credit application for a sample of customers to confirm that appropriate credit checks have been performed before giving credit. For a sample of new customers, review the authorization of credit limit and ensure that it was okay, and ensure that it was uh, authorization, ensure that it was reviewed by finance director, finance director, director. Further review for evidence of regular review conducted by the finance director. So finance director is reviewing the credit limit before authorization. So check whether there is any sign signature. Second, he's saying that he is reviewing on a regular basis. So what is the evidence of that regular review? That also we can check. You don't need to write two, you can write only one, because even if you write one, you will get marks.
So either respect the documentation or the experiment.
Yeah. Write whichever is a strong one. So the second one is more stronger because it shows that it's being regularly reviewed, as well as the finance director is actually reviewing it. Right. All right. Next one, written. Okay. The next one is that customers must show the promotional email. It's not necessary. Point wise is enough. At the cash till and have discounts and have the discount barcode scanned to access special discounts. This ensures that discounts are only given to authorized customers and can only be used once, which reduces risk of material misstatement of revenue through fraud. One second. Next control was customer must show the promotional email at the cash till and have the discount barcode scanned to access special discounts. This ensures that discounts are given only to authorized customers and can only be used once, which reduces material misstatement of revenue through fraud. One second. Fine. Yeah, sorry. Yes, very good. Walkthrough test. So they can go check. Not necessarily that. Auditor can actually input the discount code manually and see if it is working. So once already try to input or scan the barcode for discount code which has already been scanned to see if it is working or not. Yes. So attempt to manually input a discount code or amend the discount amount calculated by the system to ensure that the discount cannot be manipulated. Hmm? which is, yeah. Next one, a monthly analysis. A monthly analysis of revenue is reviewed by the sales director with any unexpected movements investigated. A report containing this analysis is presented at the next board meeting. Prevent or detect. What does this control prevent or detect? Right? So investigation of any unusual movements will help to detect any misstatements in revenue due to fraud or error on a timely basis. For a sample of monthly revenue analysis, obtain copies of the source information. Like from where are they preparing this information? You need to obtain that information, correct? Yeah, revenue statements from the data set where you are preparing this revenue board report. Consider the thresholds for sales director investigation and investigate if there are any evidence of reviews being performed. Right? Second, for a sample of board minutes, review the minutes for evidence of the report being presented to the board and discussed appropriately. So they are saying that this board, this revenue report is being published to the board of directors and being discussed, right? So in board minutes, it should have been discussed. That's what we are trying to do. Very simple. Threshold, hold. So there any questions, Fahim?
Recognizing the revenue has been recognized and it is accurately recorded in the statement.
Done? Yeah. So next question is for 10 marks. So which means we have to identify 5 deficiencies and 5 control recommendations. Done, no? Right. So, and here you have to recommend 5 deficiencies and controls for purchases and payroll systems. Okay. So the next system that we need to read is purchases system. Grandstand has central, see, of course, any scenario you take, when they are asking you to write 5 deficiencies, there will be more than 5. So I am not going to write all the deficiencies. I'm going to pick up whichever is the tougher ones for you. Easier ones, which I have already been discussing for quite some time, I'm not going to write because I wouldn't want you to write. Grandstand has a central purchasing department. Monthly exception report of any changes made to the supplier master data is automatically generated and printed and then filed. So what does there is a deficiency here? What is a deficiency? Very good. Wonderful. So it is not reviewed. So monthly exception report is obtained, but it is not reviewed. What is monthly exception report? Is nothing but master file changes which is made to the master file. Let us assume that master file supplier list has, let's say, 10 suppliers. Right now, new supplier came in. Once you enter it, right? Once you enter the data, that is exception report. Correct. So someone has changed it. And if no one reviews it, anybody can enter new supplier, right? It will create what? Fraudulent orders, fictitious suppliers, loss of revenue. Yes, to the company. More than loss of revenue, most loss of cash flow because you purchase, right? So you will give fraudulent orders to fictitious suppliers and you will pay to the suppliers. So loss of cash flow, not revenue. Increased expenses, absolutely correct. Okay, so what is the recommendation? It should be reviewed regularly, right? And the review should be evidenced by an appropriate official. Simple. Opposite of what is the deficiency. When goods are ordered and purchase order is generated within the ordering module, authorized by the relevant individual and sent to the supplier, the purchasing and finance department as well as the stores are able to access the ordering module via orders. So what happens here? What is the issue? Any issues here? Who all have access? The purchasing? Okay. Have access to the ordering modules. A purchase order is generated, authorized by relevant individual and sent to the supplier. So I'm not seeing any deficiency over here. To be very honest, I'm not seeing much of a deficiency over here. So let's wait. Let's think, go to another paragraph. Goods are directly delivered to the relevant store where employee checks the quantity supplied to the supplier delivery note and the purchase order. Correct? On completion of the checks, an electronic receipt notice produced. Only stores and the finance director have department have access to the GRN within the module. Purchase department does not have access. It is a deficiency. Correct? And goods are delivered directly to a store where an employee checks the quantity received, but not the quality. Quality checks are not performed. So if defective goods are being delivered or defective goods are being received and that goods are being sent to the customers, it will lead to a loss of goodwill. And we will also lose our cash flows. Our cash flows will get affected. Isn't it? Defective goods cannot be sold. So we'll have to scrap them. So we will lose cash flows. Right? So there are two deficiencies in this because they are not checked for quality and purchasing department don't have the rights to view the GRN. So that's again second deficiency. So 3 deficiencies are over. No, you can write it as 2 separate. Due to shaft outages, the supply statement reconciliation are no longer performed. Another deficiency. So 4. So for purchasing department, we have 4 deficiencies which we have identified. See, they have asked you to write purchases and payroll systems. Correct? So now the question is, can I write 4 in purchases and 1 in payroll? Or should I write 3 in purchases, 2 in payroll? Right? You can. There's nothing wrong in it, but think in this direction that when they're asking you to read the scenario, whichever has more, write that more, and then at least try to write 2 from the purchases item. There's nothing wrong that you are not writing. Even if you write only 1, it is no problem. But it's just a suggestion, that's all. Okay? Yeah. Yeah. Any way you can write either 4, or if you're able to identify 5, then 5 from the purchasing department. Generally, if they're asking for 5 in one department itself, there will not be 5. There will be less than 5. You need to know that. Okay. Let's look at here. Cranston has separate human resource and payroll department. Okay. The HR department is responsible for setting up employee for new employees. As part of this process, an authorized joiner form, including all relevant details, is sent to the payroll department so that new employees can be added to the payroll. However, when the temporary employees are required at a short notice, joiner forms are not completed. So new joiner forms are not completed for temporary employees. What will happen? Who does this? Instead, the relevant store manager notifies the payroll department by email on the day of the new employee starts to work. So due to that, what will happen? Yes, fictitious employees can be created without any approval. Fictitious employees can be created. We have done similar question like this in the revision kit also, right? So it's like a repetition. All permanent employees are paid on a monthly basis by the bank transfer. The payroll for each store is passed to the store manager for review and approval before 2 days. Before the payment. The store manager is required to report back to the payroll department only if any errors are identified. Right. So what will happen? This is like a negative confirmation. See, if I ask Asjad to check this and tell him, if you identify any error, you report back to me. What if Asjad, 2 things. What if Asjad did not identify any error? So he will not report to me. So no problem. But what if Asjad did not review at all? Correct, no? So what happens, right? There could be errors, but what I will assume that there is no error because Asjad did not perform the review at all. He forgot. Understand? Clear, no? Yes. Temporary employees are paid in cash and pay packets are prepared and distributed by the payroll department. When employees collect their pay packets, they are only required to state their name. They count the cash pay packet and sign for it. So what happens? Anak can go and say that it's Asjad and collect the money. No, you are annex whether the Asjad's identity is reviewed. No, correct. So any employee in the name of another employee can go and collect the pay packet. So Anak can go and collect the pay packet of Asjad. So next time Asjad when he comes, there's no pay packet. It has been already been collected by someone fictitious. You understand? So along with name, identity card also should be provided. To see if it is Anak, then if it is Asjad, then show the identity card of Asjad. If not, then you are fictitious. Right? So I'll be writing 5 of them, right? So one of them I'll be writing is the qualitative, one thing that I'll be writing is the monthly exception report. I believe that that's a good one. Then I'll be writing about the quality checks. Okay. Then I will be writing, I'm not going to write about the GRN, purchase department doesn't have rights. I'm going to write about the supplier statements. Okay. I'm going to write about the new joiners issues. Okay. And I'm going to write about the store managers required to store managers required to report back to the payroll only if errors are identified. I'm going to write about that. So because I feel that those are the tougher ones compared to the others, which are more or less simpler. Okay, you can start. We can start. Number one, a monthly exception report of changes made to the supplier master file data is produced but not yet reviewed. This increases the risk of fraud as members of the purchasing department could be fictitious suppliers and then place fraudulent orders without detection, causing loss for the company. Any errors in changes made to master file would also not be identified. Okay. So you should say that the recommendation will be the monthly exception report of changes should be reviewed by a responsible official on a regular basis, and any unusual changes should be investigated, and this review should be evidenced. clients. Just imagine you're auditing 10 different clients. You will prepare it 10 for 10, yeah, same similar report you will be preparing for 10 different clients. Okay. So goods are delivered directly to a store where an employee checks the quantity of goods received, but not on the quality. If defective goods are accepted, it will be more difficult to dispute paying for them. Right? So defective goods will affect the customer goodwill if they are sold directly to customer. Further, goods unsold will have to be scrapped or discounted, which could affect inventory value. Right? So you should say goods should be inspected for both quantity and quality once received. When producing the goods, the GRN, the store employee should input their signature as evidence of checks completed. So whoever is checking it should sign it. Yeah, so we can check who is the responsible person who's supposed to do the quality check and take necessary action. Again, just back. Yes. So the next one, So goods, yeah. Supplier statement reconciliations are no longer performed. This could lead to increase in risk of errors in individual supplier accounts not being identified promptly, which would result in misstatement of payables and could lead to suppliers being overpaid. So it's either ways also. It could lead to suppliers being overpaid or not paid on timely basis, leading to underpaid. Yeah, which is called as not paid on timely basis, which could lead to loss of goodwill. On a monthly basis, supplier statement reconciliation should be performed with all items fully investigated. Yeah, supplier goodwill. The supplier statement reconciliation should be reviewed by a responsible official who should evidence this review by his signature. Now, what is the next one? Done with this? Okay. So next one is joiner forms are not completed when temporary employees are required for short notice. Instead, they are added to payroll following email notification from relevant store manager. The store manager may not carry out all required procedures for new joiners or record all necessary information as they do not complete the joiner form. This could result in temporary employees being not being set up in the payroll system correctly. Okay. Yeah, that's what we have mentioned, right? The store manager may not carry out necessary procedures and do not complete. This could result in temporary not being set up proper correctly. Yes, fictitious employees. Sorry, the uh, uh, the addition of employees without approval from HR could increase the risk of fraudulent employees being added. The joiner form should be completed and authorized by HR for all new employees. Right? If it is not possible for the HR to complete the joiner form, then the store manager should complete. If not possible for HR to complete the form, the store manager should complete the form and a member of HR team should review and authorize the details prior to being sent to payroll. Payroll should then sign the form as being action. The payroll department should be notified not to add new employees to payroll without a joiner form approved by HR. Okay. Now, the last one is store managers review and approve. You have written the above one? Uh, Just finish it off, then we'll go to the next one. Store manager should review and approve the payroll report before the payment dates are uh, be, uh, before the payment date, but are only required to report back to payroll department if errors are found. The payroll department may interpret a lack of response as no errors when store manager fails to check or negative response is has gone missing. This could lead to errors not being identified, resulting in payroll cost being misstated. Store managers should be required to report back to the payroll department whether or not errors are found. They should sign the payroll as evidence that it has been checked. The payroll department should follow up on any non-replies prior to processing the payroll. Okay. So we'll take a short break. So time is 4:10. Please resume in 10 minutes so that we can close by 5. Okay. Yeah, we'll 10 minutes. We are going to do is of risk. Okay. So in this scenario, this is the second scenario. In this scenario, we already have couple of other questions as well, which are like direct questions and corporate governance related questions. So I'm not going to discuss that in detail. I'm not going to discuss that, but we are going to focus on risk related questions because, as you know, risk related questions are little important, and at the same time, there is a high chance that such questions will be asked for higher marks. Like for example, if you can see, entire risk is being asked for 16 marks, right? Which is you need to write 8 risk. So it's better to do these questions first and then come back to the other questions. So even if in your exam, as a suggestion or as a tip, what I can tell you is that if you attempt these bigger questions first, then you will be able to attempt the smaller questions later. Then it will be easier for you to manage your time. Because once you are completed with bigger questions, your scoring capability will be more. Like for example, you can score more in risk, you can score more in internal control, you can score more in control recommendations. So you finish off those things first, and then you look at the direct questions, which will help you that even if you leave, let's say, you know, and for due to some reason you are not able to write that one direct question, you will lose only to the extent of 4 marks, 5 marks, etc. But if you leave a major portion of your risk, then it is actually becomes a bit trouble. So to pass the paper, it will become difficult. So as a suggestion, I would always recommend students to write the bigger questions first and smaller questions later. Okay. So the first one is audit risk. So open this particular scenario and read it. Okay. Open this particular scenario and 1st July, it is 1st July X5. Your firm Yang has been recently appointed as an auditor to Musitastic company, and you are planning the audit of your new client for the year ended 31st August 2000 X5. So there is a risk. It's a new client. New client means detection risk, right? And the opening balances will not be tested, correct? So as a response, what we should do, spend more time to understand the entity. Second, appoint experienced auditee. So third, increase the audit procedure for opening balances. Test the opening balances. The audit manager has attended the planning meeting with the finance director and provided you with the following minutes. Mutastic company operates 50 music stores around the country, selling musical instruments and offering weekly lessons. When booking lessons, customers are required to pay 10 lessons in advance. Okay, what is the risk here? There is a risk here. Yes, revenue received in advance. So there will be deferred revenue. So there is a risk that revenue would be overstated because they would have recognized this as revenue and not as deferred revenue. So liability being understated, revenue being done. So what is the response that you should do? Discuss with the accounting treatment with the finance director, right? For sample of lessons paid in advance, review the journal entries to check if they have been correctly posted as deferred liability instead of revenue. Very good. Mutastic sells wide range of instruments because the number of stores and the high number of inventory lines, the inventory counts were not able to completed in one day. As a result, inventory count will be spread across 29, 30, and 31st August, and adjustments will be made for goods received and dispatched during the date the inventory is counted. Yang is able to attend annual sufficient count for the purpose of audit. So what's happening? When you are doing, yes, detection risk. Why there is a detection risk or there could be misstatement? Because see, what happens is that when you are doing a count, and at that date your inventory movement should be stopped, only then you will be able to count everything. But they were not able to do the count in one day, so they had to do it for 3 or 4 days, and during that time what happened, inventories were being added and sold, so inventory count could be misstated. So it could lead to inventory being overstated or inventory being understated, correct? right? So inventory, it will lead to issues relating to completeness of the inventory as well as existence, right? Completeness because some goods would have received, but we would not have counted. Existence because there are some goods which are, in the records which and sold off, but we didn't count it, or we have counted it, something like that. The company has been expanding steadily, right? And during the year spent for 2.4 million on refurbishing of the stores. Yes, all of this expenditure has been recognized in property, plant and equipment, repairs and maintenance, right? So the split should be checked, and any expense which is repairs should be recognized to P&L, right? So obtain a split and of the refurbishment program and review with supporting documentation such as invoice to confirm they are actually capitalizable expenditure or not. The company is also planning to add a rehearsal space to the 20 largest stores. And in order to finance this, the company obtained 8 million interest-bearing loan, which are repayable in quarterly installment over 5 years. So, if there is an interest-bearing loan, then loan must be allocated between non-current and current portion. So, there will be a failure on allocation, right? Classification issues could arise. Second is that interest might not have been accrued appropriately. So, interest calculation could be misstated. So, review the loan agreement and re-perform the calculations with respect to the liability and split the current and non-current liability. Compare this against the financial statements and disclosures. Recalculate the interest accrual. Understood? And review it against the expenses. To raise awareness of the company's existing products and the new rehearsal spaces, Mutistic launched a radio advertising campaign in May 2005. The directors have indicated that at year-end, advertising cost of 0.8 million relating to revenue to this campaign will be recognized as current asset because they believe these advertisements will help to boost the revenue for next to 12 months. The final advertisement will be aired on the radio before the year end. So are they allowed to capitalize the advertisement cost? It is completely not allowed. Right. Mutistic cannot, the cost recognized, the cost should be recognized in operating expenses because they are an advertisement expenses and they cannot be recognized as current assets. If they are not rectified, then expense is overstated. Sorry, expense is understated. Current assets and profits will be overstated. Then what will you do to as a response? Discuss with the finance director and review the supporting documentation in relation to advertisement, right? Request the management to remove the current asset and recognize it as a expense and review if they have done it or not. Review the journal entry to check the evidence if they have completed it. Mutistic has an internal audit department which undertakes control over testing of the stores. Each store is visited at least once every year. The audit manager has discussed that the um, finance director, sorry, that the external audit team may rely on the controls testing which is undertaken by the internal audit. The internal audit investigation during the year have highlighted an increasing number of differences in several stores when reconciling cash flow. Records to actual cash and cash flow, the debtors have decided not to investigate these differences on the basis that they have only involved small amounts. So first and foremost, the external audit may place reliance on the internal controls, on the internal audit for the controls testing. If the reliance is placed on irrelevant or poorly performed testing, then what will happen? The audit team may form an incorrect opinion on the controls of the mutistic company. This could result in lack of proper sufficient substantive procedure, lead to increasing in detection risk. Understood? So the external audit team should meet with the internal audit, read the reports, review their files, review their work done, and check whether they have been in line with the external auditor's requirement. Correct? Before using the work of internal auditor, external auditor should evaluate whether the internal auditor work which they plan to use to determine the adequacy of the purpose of the audit. So what for what reason they will use the internal auditor's work should be checked. And in external auditor, even though they are placing reliance on internal auditor, they have to re-perform certain test of controls. Clear, right? Yes. Further, they have identified, so here there is a issue. Here there is an issue. And here there have been several differences. Correct? So this is lack of controls, isn't it? Deficiencies in controls. The internal auditor have highlighted increasing number of differences between the cash till and the cash stores. And the directors decided not to investigate these differences because they are all small. But what is the issue here? This is risk of fraud. Now, whether the differences are only small or are there differences which are not yet rectified or not yet identified is the question here. What if there are more errors or more differences, but they didn't identify? Right? So in addition, an increase in control risk will lead to detection risk problem, right? So we cannot do a substantive procedure or control reliance approach. We have to perform full substantive procedure. The financial accountant retired suddenly, and as a result, finance department was understaffed, and replacement was recruited in March XY. So it's very simple. Inherent risk, right? What is inherent risk? Financial statements could be misstated because of understaffing. There could be no financial accountant, will lead to increased control risk and higher chance of fraud or error. Correct? So what we can do, we can make inquiries. We can discuss with those charged with governance or management regarding the controls performed by the financial accountant during the period and whether they have been kept vacant. Right? You have to perform higher level of substantive procedures for the period where there was no financial accountant. In 2005, Musitastic names they have given received notification that music listening authorities investigating complaints that the music teachers had breached copyright regulations by photocopying printed music for their use of lessons. The directors have informed you that they do not intend to provide or disclose any potential fines, as they believe they have required permissions and Musitastic has no legal liability. The music licensing authority, so this is a risk because if it is probable that the fines are payable, then it has to be provided for. Even if there is a remote possibility, then it has to be disclosed in the financial statements as a contingent liability. So you have to review the correspondence with the licensing authority, review with the lawyers, discuss with the lawyers, right? Ask them about the legal opinion, right? Discuss with the external confirmation with the lawyers, not with the lawyer confirmation. It's called as legal confirmation. And then third, discuss with the management regarding the likelihood and chance of this case. Discuss about why they are not charging provision, etc. Okay. Clear? So again, I'll be writing. So there are 8 risks and close to 10 risks have been mentioned. I'll be writing only the important ones, whatever I feel that it should be good. So I'm not going to write about the customer lessons, which is deferred liability, which is easy one. I'm going to write about detection risk. I'm going to write about inventory count, right? I'm going to write about the internal control. I'm not going to write about PP. So 8, maybe I might write 6 or 7 because I want you guys to write the remaining one and compare it. So all internal audit related I will be writing. Okay, clear? And opening balances, even though it is easier one, it is always important, right? So and there is a specific way of answering that. So I will write that. Okay. So the first one is, this is the first year of Yang and Co has audited Musitastic company. There, this could lead to detection risk as Yang company will lack knowledge regarding the company's accounting policy and transactions. Further, okay, transactions uh, which could lead to misinterpretation of audit evidence or or the performance of inappropriate procedures. There is also less assurance over the opening balances as Yang did not perform the audit last year. Okay. Allocate additional time should be spent by Yang to research more about to understand more about the client, its business and its systems. Yeah. What happened? Ah, നീ എന്ത് എക്സാം ആണോ കൊടുത്തത്? Give എന്ത് എക്സാം? So increase additional substantive procedures, additional, no need to say substantive, additional procedures should be completed or should be performed over the opening balances. Okay. Okay. The inventory count is spread over 29, 30, 31 August, and adjustments made for goods received and dispatched between the date of inventory count and year end. There is increased risk relating to completeness and existence of inventory if goods received and dispatched between the count and the year end are not recorded correctly. This would result in a misstatement at year end. Attend the inventory count and observe procedures to confirm that goods received during the count are appropriately segregated and included in the count records. That goods to be dispatched during the count have been appropriately segregated so that they are excluded from the count records. So you need to attend the inventory count and ensure that observe that whether the goods received during the count are properly segregated and goods dispatched are properly segregated. So goods received should be counted or should be adjusted for. Goods dispatched should be properly adjusted for. So let's say there are 10 chairs. If 5 chairs has to be received, it has to be separately segregated. 5 chairs to be dispatched, separately. Okay. The next one is this is the third one. So what I'm going to write is Musi testing company is planning to include in current assets of $0.8 million, which relates to advertising cost incurred and AdWords air before the year end. The cost should be recognized as operating expenses in the current year financial statements, as all of the AdWords will be aired in the year ending 31st August 2000 XY. If these costs are not expensed, then current assets and profits will be overstated and expenses understated. Review supporting documentation for advertisements to confirm that all were aired before 31st August 2000 XY. Request that management removes the current asset and records the amount as expense in statement of profit or loss. Review the journal entry to confirm the adjustment made. So that is the third point. Okay. Completed. All right. The next one is regarding the reliance placed. The external audit team may place reliance on the controls testing work undertaken by the internal audit department. If reliance is placed on irrelevant or poorly performed testing, then the external audit team may form an incorrect conclusion on the strength of Musi Tastic company's internal controls. This could result in them performing insufficient levels of substantive testing, increasing detection risk. Okay, so the external audit team should read the reports of internal audit team and meet them to meet them and discuss the nature of work undertaken and review their files relating to store visits. Right? You can say before placing reliance on their work, audit team should evaluate the internal audit work which they plan to use in order to determine its adequacy for the purposes of audit. In addition, the team will need to reperform some of the testing carried out by the internal audit in order to assess its adequacy.
ആ ഒരു ഫ്ലോ വരുന്നത് അതുവരെ വേറെ എഴുതിക്കൊണ്ടിരിക്കുന്നു ആ പോകുന്നുണ്ടല്ലോ ഇതിനാണ് നടക്കും ഗ്രൂപ്പ് ഓൾറെഡി ഗ്രൂപ്പ് ഓൾറെഡി ചെയ്യുമ്പോൾ റൺ ഔട്ട് ആവുന്നത് ഇത് വേണപ്പോ കഴിക്കൂലേ ഇത് വേണോ എനിക്കല്ല
Next one, internal audit investigations have highlighted an increasing number of differences between the cash till records and physical cash in several stores. The directors have not have decided not to investigate these differences because they only involved small amounts. There is a risk that these differences are result of fraud, and several small differences could be material when aggregated. In addition, an increase in control risk arises when internal auditors detect a problem, but it is ignored. Additional substantive procedures over cash and bank balances should be performed. The audit team should do what? Exercise professional skepticism throughout the, the testing, recognizing that a fraud may have arisen as a result of differences. The company's financial accountant was retired due to ill health in November 2004, and the finance department was understaffed until new financial accountant was recruited in May 2005. The lack of supervision and understaffing during the period when there is no financial accountant will lead to increased control risk and a higher chance of error or fraud. Discuss with the management who performs the controls normally. Control normally performed by the financial accountant during the period when the role was vacant. Who performed the controls which were normally performed by the finance when this was vacant. If test of controls indicates higher risk, then what you should do? Perform increased level of substantive procedures during the period when there was no financial. 6. I've written 6. Okay. So I've written 6. You can write any two. It can be related to PPE. It can be related to that loan, or it can be related to provisions. Okay. I've written 2. So just write those 2 as a homework. Okay. So write the remaining 2 questions as well. And I would suggest you to write finish off this one. Okay. This one. There will be always more risk, but you have to write only 8. So just write 8. Okay. Don't write 10, because the ACCA does not. Yeah. First of all, 10. Second thing is that ACCA will not choose the best one and then give you marks. ACCA will choose the first 8 and then ignore the remaining 2. So what is the purpose of you writing the remaining 2? You understand? So write only 8 if it is required. All right. Okay, so we'll continue tomorrow. Tomorrow we'll be doing the substantive procedures of this particular question, and we'll do some risk-related questions of. We'll be discussing more tomorrow rather than writing. So discussing more questions. So internal control, substantive. I'll try to bring new questions as well. Try to research few questions as well, and bring in new questions. Yeah, that we will discuss. Any doubts or queries, will have at least 15 to 20 minutes. We'll keep as a placeholder just for the doubts. Yeah. Just send it. What you do is just send me that question. No, we will do that question. That's okay. So if you have any encountered with any questions which you feel that it is difficult, just send it to me. We'll do that question. All right. Anything else?